What's going on, everybody? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is another night session of Trade with Travis. Sorry for being late, but want to go ahead and make sure we end up talking about the trades that we ended up taking a look at earlier today and being able to talk about what the automation system actually ended up doing and being able to see if I could be able to help out when it comes down to actual opportunities. This will be the last session of this week, as this is the first week that we've done a night session pretty much Monday through Thursday. Uh, I would like to keep it that way to where you end up to where we end up going Monday through Thursday. Friday, we will not have a session in the nighttime, and we will probably not have a session in the morning time either um, on Fridays. But unless there's like non-farm payroll or something like that, to where you could be able to get the most out of it. But let's go ahead and go through the disclaimer, and then after that, we'll go ahead and get started. I'm not a CTA, so I'm not going to tell you what to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. It also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, let's go ahead and go through the disclaimer. Let's talk about the trades that we end up taking at the beginning of today. I end up saying, matter of fact, let's go to the economic calendar real quick, and then after that we'll talk about that. But my thought process earlier this morning was that I wasn't going to end up making a move until Jerome Powell actually ended up speaking at 9, and typically because because we end up having our sessions at 8, I wasn't going to be able to give out as much information based off of that. But we did talk about potential positions that you can be able to set as pending orders, and if you end up doing that, then you would have seen that you would have made profit on NYSE. You probably would have made profit on DAX. And probably would have lost on not. I'm sorry, I don't think we took anything on Nas 100, but I know for certain we end up taking something on US 30 and on DAX for those moves. So we will talk about those. Um, so earlier today we ended up having initial jobless claims. The numbers actually end up being good. For us, that there was a monetary policy statement that ended up happening in the eurozone. It ended up being 0.75 for the rate on deposit. And then after that, we ended up having Jerome Powell end up speaking at 9 o'clock. Obviously, the market ended up moving. The market was very, what's the best way to say it? Hectic. That'll probably be the best way to be able to say it. Overall, when it came down to movement, currently right now, um, we're finally seeing some overall market movement based off of how the market ended up moving. So just keep that in mind as we end up going through and taking a look at the overall pair. So I'm going to start off with US 30 and talk about what the overall plan actually was and see how well it's actually working, whether if it's going in our favor or not in our favor for the overall position. So what ended up happening was that obviously when the news ended up coming out right around 9 o'clock, we ended up having two orders that we were primarily looking at. We ended up having a sale that was at we ended up having a sale that's at 31,540 with a take profit of 31,460. And I ended up saying that we probably could take it a little bit longer, but I said that the most accurate position to probably get out will be at the position that we end up getting into. And what ended up happening based off of that news, market ended up falling off early when it came down to that movement. Ended up placing us in the profit, hitting the take profit for the overall full level, fell all the way down to the previous resistance numbers and the previous support areas of where the market actually was in the middle of or at the beginning portions of September. And then after that started to pop back up. Now, when it popped up, it actually ended up placing us inside of our buy. That buy trade ended up going in. Remember, I ended up saying because this was one of those high volatility days that I would probably use a 35-point stop or a 35-point trail. The trail stop ended up kicking in, ended up making profit off of that move as well. Now, remember, the whole thing of when you end up getting these orders, they end up popping back inside of these levels and you end up going from there. It will give you multiple opportunities to be able to get in. Now, I did not trade those multiple opportunities when it came down to the downside, but my automation system actually ended up catching it when it came down to the upside. So there was a couple trades based off of that overall movement that we was able to capitalize on for that overall growth that end up being caught at 31,550, 31,588 and 31,589. Both of those end up closing with over 200 points for its overall. I mean, with over 100 points for its overall movement. And then after that, we end up catching some trades that we're currently in right now at 31,640 with a take profit of 31,880, 32,081, and 32,381. I'm going to show that on my screen right now so everyone can be able to see it and kind of get an example of what's going on right there. So currently right now we're getting close to being able to hit take profit one, but that was the position of where we end up getting in. It was a little bit better than where we actually end up getting in based off our original move. Our original move, remember, it was at 31,660. This one ended up catching it at 640 when the market actually ended up turning around and being able to make that movement up to the upside. So currently it's getting very close of hitting take profit one. It's almost at the take profit point or trap point when it comes down to that movement. My hope is that obviously it keeps on moving up to the upside. We're getting close to the peak of the high volume node, and then after that may end up starting to see a little bit of consolidation. So that may end up worrying me a little bit based off these two positions. But overall, I think that we got a little bit more room to be able to go to the upside when it comes down to NYSE. So happy about it. Obviously got a little ways to be able to go overall when it comes down to this movement. The 15 minutes in the buy zone, and typically when the 15 minutes in the buy zone, it makes me think a little bit on what I want to be able to do. I don't think that I want to be able to hold that much overnight. And not be able to take profit on it, or not at least being able to capitalize on some of the move overall. So that's where we're at when it comes down to that movement in that overall position. So it'll be something I have to truly be able to think about if this market does pop up and be able to go to the upside area. Trap point actually just hit take profit one, so it just moved the trail stop back up. I don't know if I'm going to end up holding trade 2 and trade 3 as long as I think that it should, without necessarily looking for a U-turn in the morning, because I'm seeing that the market is starting to pinch off right now. That has me a little bit nervous, and based off of that, I think I might just go ahead and pull it. And then after that, look for a better opportunity in the morning, or look for my automation system to be able to catch it again in the morning. Let's go ahead and talk about what happened with DAX. DAX stayed inside of consolidation, so there was really no move to be able to take overall when it came down to this position. I am currently not in the market on this one. We still have the pending orders that are ready to go if the market does decide to be able to make its movement. Until then, I'm going to end up kind of laying off and just kind of waiting to be able to see what happens with that overall move. And then after that, we end up making a move from there. St. Michael, what's going on? Thoughts on Ethereum being bearish on a 1 hour time frame? We'll take a look at it. Let's take a look at what happened with NYSE. NYSE, we end up having 2 orders in. First order when it came down to the sale, ended up hitting take profit 1, based off of what ended up happening with the news from Jerome Powell. Really wasn't that much when it came down to profit. It was only 43 points when it came down to the target, but as soon as it clicked in, it ended up hitting profit for us within that first 30 minutes. So happy about that. Then after that, the market ended up pushing up to the upside. Same deal, had a 35-point trail stop. The trail stop ended up getting triggered. My automation system did not catch the buyer on this one. I actually ended up staying in on the sale when I ended up doing that. So I made some and I kind of gave some up when it came down to that movement. And I wasn't in front of the computer to be able to re-enter on the trade when it came down to this position. So I didn't get all of this overall move. I only got a portion of this move when it first happened at 10 o'clock for that overall movement. If you are still in this overall position because it never took you out when it came down to that sale, if you end up re-entering, then congratulations, about 80% of the way there for us being able to move. And just stay along with it, kind of just go from there. XPX 500, we should be close to being able to take a trade on this one, I think. Actually, we are in currently on this one. XPX 500 just triggered in at 4,015. Currently right now, because it is above this overall consolidation area, I am okay with being able to stay in the trade. The thing is, I just hope that obviously because it is overnight that the market just doesn't fall all the way down back to the support that we end up having at 39.85. I know that it will retrace. I'm just hoping that it doesn't retrace as much, and obviously doesn't take us out before being able to pop up to the upside. So um, it's in the 15 minute. Because it is in the 15-minute sell zone, we're talking about maybe an hour worth of overall movement to the downside. I just hope that while the market actually ends up moving down to that particular point, that it doesn't make it a bad trade overall for us being able to do it. Um, but I am in the trade right now. Currently, I have a negative 14 cent for the overall profit on this move. Hush, Tucker. Hush, Tucker. So let's go ahead and go through some of the pairs that y'all would like to be able to take a look at. We'll take a look at Ethereum real quick. If there's any other pairs that y'all would like to be able to go through for its overall trades, go ahead and place those inside of the chat box right now. We'll get through those quickly. I don't. There's a football game that I'm missing, and I would like to be able to watch some of it overall for those positions. Let's see Ethereum. Now, Mike, will answer this question. Are you doing this? Are you a long-term hold person when it comes down to trading, or are you a person that gets in and basically takes a look at opportunities based off a margin? That will help me out on being able to help you out. I would kind of need to know that before I kind of give you my thought process, because I can tell you how I can tell you how I would trade it, but overall we're kind of going from there. Okay, you said both. Okay, cool. So from a weekly perspective, obviously the market has been bearish. There was a counter trend line break that ended up happening 2 weeks ago. Based off of this, we can see that the market is kind of retesting on this counter trend line break as we speak. The fractal high of this overall movement is at 2034. The market, when the news initially came out from Jerome Powell and what ended up happening on Monday when Bitcoin ended up dropping the way that it did, the market actually ended up pushing to the downside, and currently right now it's actually testing this overall high. Both mainly margin down, some of current bias is bearish on the 1 hour time frame. Okay, cool. So overall, I would say that the weekly is going. I would say that the weekly is actually bearish, but I would say that the market is actually in a retracement phase on this overall move. So when we take a look at it on the daily, you should see on the daily that it could be very close to the sell zone, in which it is. Okay, so with that being said, this looks like a bear flag that we're looking at for this overall movement, and because of that, I would like to be able to see a counter trend line break actually end up happening. Now, if we're just going based off of inner trend line, there goes your first week, there goes your second week, and you kind of go from there. Or better yet, we could say that would be the move for the overall potential counter trend line break that could end up happening. But no, actually, I have to do it like this. I have to do it like that. Let's go to the 15-minute. What's going on trading cryptos? Like, did you get into that? You took that sell trade early this morning on US 30 and the buy trade on US 30. You should have hit on both if you end up having a trail stop. That should have got us back what we ended up losing in last night's session. I think you was in last night's sessions as well. That's just a general question that I'm asking. All right, so currently we can get rid of this trade plan. That trade plan ended up not working all the way through. So we end up having consolidation. It ended up pushing. It ended up breaking out, went back to the inside, and then after that, built on to that further consolidation, and then finally broke out to the upside right here. Once it did that, it fell back inside of consolidation. No, I'm not going to call it consolidation. I'm just going to call it a fall area. And then after that, started to build another block of overall movement. So essentially, it did this here: vortex, consolidation, went back into an open pocket again, and then after that, went into consolidation one more time. Does your strategy use a wick or body break to confirm trend line breaks? I typically, when it comes down to counter trend line breaks, I wait to the close of the move. Once you end up having it, once it ends up breaking the close, then after that, you can be able to make the move off of that. When it comes down to uh, the market being in a high volume node and being in consolidation, I wait to the full. I place my order on the outside of whatever the resistance price is, and then I get placed in based off of that pending buy stop or pending sell stop. The only time that I use counter trend line breaks is after the move has actually happened on the breakout. So let's say, to give you an example, if I'm looking at this move based off Ethereum, and currently right now, your question was thoughts on Ethereum being bearish for the overall moment. I would kind of consider that it could be bearish if I'm taking a look at. I'm going to try to answer both questions at the same time. Let's see. So consolidation, breakout, vortex area went back here to here. Then after that, started to build a larger consolidation inside of this block. There to there. Currently, right now, we're in a larger consolidation block. This overall, now obviously within that, you're having big push, and then after that, you're seeing that the body of it is kind of in the middle of that consolidation area. Let's say with this focusing in on that first consolidation that we looked at off the 15-minute. My pending order will end up being directly over the top of it and directly at the bottom of it, of all that consolidation. So once it ends up breaking this high volume node, typically it will fall inside of a low volume node, and then after that, it can be able to move down from here. It can be able to move down to where the next high volume node or the next high volume node will either being for the support or for the resistance. In this case, based off of the 1 hour, the consolidation is actually inside of the low volume node, and because of that, to me, that makes it kind of untradeable, because there's really no area for it to be able to go to actually be able to truly make profit. So to give you an example, like when we end up taking a look at US 30, and I'm glad I ended up taking profit off of US 30 just now, because we see that it started a U-turn. But the reason why I end up saying the number that I end up saying was that if we look previously, in September 2nd, the market ended up pushing all the way up to 31,960, and then after that rejecting. It did the same thing on August 30th. So when we start looking at this movement to the upside, yeah, from an hour perspective, once it ended up breaking this overall consolidation block, there was two positions that we could be able to get out. The first one will end up being 31,745, and the second position will actually end up being a resistance, because the market hasn't proven that it's ready to break the resistance yet. Once it does break the resistance, then after that, you can be able to have a bigger order based off of the next high volume node based off of history. Now, I'm just saying this now because hopefully it will remain to be true. If the market does break above 31,960, then there's a very good chance that it could go all the way back up to 32,790 or 32,800. So that's the big play when it comes down to these moves. Every time that I end up talking about this strategy, I'm really trying to find what's going to end up being the next big move that we can be able to get into without necessarily having to fight everybody when it comes down to that movement. That's the one true reason why I don't like trading consolidation. Because if you're trading consolidation, you really only have a 33% chance of being able to win that trade, especially if you're trading in the middle of it. If you're buying that support and then selling that resistance, yeah, that can happen for you. That can happen for you a couple times. But if it's done tapped support or resistance more than 3 times, then really and truthfully, the only position that you can be able to make profit off of accurately will only be at the halfway point of consolidation. Well, if you're doing that, then once again, you're still fighting with everybody. So the confirmation of when to be able to get in for the consolidation break will be outside of obviously the resistance and outside of the support. And then after that, you're going after the next high volume node. I mean, you're going after the distance between that low volume node to the start of the next high volume node and getting out. Appreciate it. Well, I mean, that's 6 years of mistakes that I'm talking about, and legitimately being able to kind of realize and understand that if you take a look at every market legitimately has a area where it has consolidation, and then after that, it has an area where it has an explosive trade area. Now, we can talk about moving averages. We can talk about um, you can talk about whatever strategy that you may end up doing. um, Fibonacci's, anything else like that. They're all very good when it comes down to strategies, but the one thing that they don't have is previous history to tell you where to be able to get in and get out. With price action and with volume, the volume based off of history will end up telling you where most people end up getting in and where most people end up getting out. So the simple rule when it comes down to that is don't trade in a high volume node because you're not going to make money in a high volume node. You're going to fight with everybody else to be able to go over scraps. So wait until the market breaks out of the high volume node, and then after that, exploit the low volume nodes. If you end up doing that consistently, then what you're going to end up finding out is that you're going to end up making profit more consistently without having to be able to, one, look at the computer the whole time, but two, um, staying in a trade for more than a day or two or whatever may end up being the case. Because you notice all these big moves that end up happening, even on Dow Jones, this um, this 700-point move end up happening in a day. But the reason why it happened like that was because it was in an unfair market price. But it stayed in consolidation, or it's done been in consolidation for almost 5 days. So that same 5 days of overall movement you end up getting in one day just because you were more patient than anybody else. Um, Sorry for that rant, but to answer your question, market's in consolidation. I wouldn't do anything until the market breaks out. Once it ends up breaking out, it actually ends up falling back inside of it'll fall back inside of a proven low vortex area, where the support will end up being at 1538. And if it breaks up to the upside, then obviously you got a little bit more room to be able to go up to. But the best trade will end up being once the market ends up breaking above 1,715. Once it breaks above 1,715, then I think you'll have a better trade and a more explosive trade to the upside. But if it does fall, then I think we end up talking about what was it? If it does fall, it can fall back to the past resistance term future support of 12,000. 1,260. Either way, I probably wouldn't make a move on it yet. I just wait until the market actually ends up breaking out. I gave you a long and drawn out answer just to tell you I wouldn't do anything. Uh, Good night. Um, let's take a look at the big three, and if there's no questions on anything else, then we'll go ahead and get out of here. Um, let's see. I'm going to talk about oil because the first thing that ended up popping up from a weekly perspective, the market is bearish. We end up talking about a bearish crown that was forming up. Currently, right now, that bearish crown could fall all the way down to 58.50 when it comes down to the overall downside movement. And that's just the custom field that you end up looking at from that point. Let me see if I can hide this. I didn't want to do that. Okay. But yeah, because the market only retraced down, well, when the market ended up retracing to, okay, let me clear the screen. I'm going to clear the screen and start all over again. Thanks for the explanation of your zones. Take care. Take it easy. You have a good one. I'm going to start over on this one. All right. Market hit the low, fell down to support. Currently, right now, market is retracing. It's at the 618 when it comes down to this movement. You take a look at it from a daily perspective. The daily A was broken when it came down to that move. That's the reason why we end up talking about a bearish crown. Based off of that movement, we can clearly see that this is the new, this will end up being the new A to the downside. The current field, when it comes down to that movement, can fall all the way down to $64 a barrel. But there's a better chance of it basically retracing to 77.11 because of an 80-20 rule. Typically, when the market ends up having a retracement, as long as it doesn't go up to 382, then typically you'll see that people will start finding support or starting to be able to fight it right around the 127 for that overall movement. So I do expect that the market will go to 77.11 at least first before being able to make any other move. Now, based off of that King's Crown, you have your A, B, C, D. Market broke the A right here. When it broke the A, it ended up popping back up. This is your right tip right here, and the market could potentially keep on falling down from there. Now, based off of that, the sub fields will take us all the way down to $58 based off of what I just said before. That's how you end up using the sub field A, sub field B to get that. And that's where that 57.58 came from. I'm going to undo that real quick. As a matter of fact, I'm going to make a horizontal line, then undo that because I don't want to have that on the screen anymore. But that is potentially where the market could potentially go from a long-term perspective. But I always say this, we're getting close to the winter months, and because we are getting close to the winter months, I do expect that oil will have a little bit of a drop. It may go to 77.11, but I don't think it will fall further than that. And then after that, start to push back up, especially going into October and late November when it comes down to that movement. But overall, the market is still considered to be bearish in my mind. I think that it's going to end up falling down to 77.11 at a certain point. I would not take a trade on it only because the market is in a buy zone. Because the market is in a buy zone when it comes down to the stochastic, it makes it kind of hard to be able to take in a trade and stay in that trade for 7 to 11 days, knowing that the market could potentially go against you. Okay, so that is that. U.S. dollar index, typing a Y, yes, if that made sense. United States dollar index hitting the daily D extension at 13,168. Since then, the market has finally given us a fractal high to be able to work off of, and we're in the sell zone. That means to me that the market will start to retrace. We got about 7 to 11 days to be able to see the market fall. Typically, I trade with the trend. That means that I don't care about the downside movement. I would not look at being able to get into the downside movement. But I would say that means that when you're looking at this pair overall, you can say that when it comes down to trading opportunities, I would trade against the United States dollar. So if there's a pair that has a better opportunity to be able to say that it can be a little bit stronger than the United States dollar, let's say if we're looking at pound United States dollar, and the pound is showing that it could be more bullish overall with the overall basket, then I would take an opportunity to be able to trade the pound United States dollar when it comes down to that movement. I have a question about the XABCD pattern. Go ahead. What's up? Force that movement. But overall, I do think the market's going to fall. I'm not interested in being able to make that movement to the downside. I'm not interested in buying it up to the upside until the market makes a U-turn. Do you use it? Yes, I do. I use it when the market is trending. When I know that the market is trending, then I use the ABCD pattern to be able to understand what a retracement is and understand where what a take profit is going to potentially be using Fibonacci's. That's the simple and quick answer. Unless you want me to explain it a little bit more. If you want me to explain a little bit more, just type it in, and I'll kind of go a little bit more into detail. Gold end up hitting support, end up having a up push day. The market is at 17.15 at this particular point. It hit support at 16.85. Okay, I really don't understand it. Where should I place the D extension? Okay, cool. All right, I'll go over it. So with that being said, gold once again is still untradeable. I still wouldn't do anything with it when it comes down to that point. All right, so here we go. Let's go quick lesson and we'll get out of here. So just gonna talk about an uptrend. And typically I do this in my academy groups and everything else like that, trading cryptos live. So if you're interested in being able to learn a little bit more about that, um, this is one of the courses that we end up talking about. This is our Fibonacci fundamentals course that we end up talking about, that I'm about to talk about. All right, so simply put, when you look at an ABCD pattern, you have the A, and then after that the B. That's the first movement when it comes down to the market having a start price or a fractal low, and then after that pushing up to a fractal high. Once it pushes up to a fractal high, then obviously the market will end up retracing. Now, the simple rule when it comes down to that, overall, without truly, um, let's see, where's my text? Where's my text? Text. I was just looking at it. Oh, there it is. So obviously you have your A, you have your B. Then after that, you end up having your C. Now, keep this in mind. When you end up having your C is based off of that U-turn. So you end up having a rally. Then from there, from B to C, you end up having a retracement. Now, retracement is not confirmed until a couple things end up happening. The first thing is that the market ends up breaking a counter trend line break, right? So once the market ends up breaking a counter trend line break and it starts to be able to push up to the upside, then you have a good chance of being able to identify that as the U-turn that could potentially end up happening. So that's how the C is actually basically formed. In order to be able to find your D extension, you have to be able to understand what a C actually was created. So in doing that, you can use the Fibonacci's to be able to go to the fractal high of the A, the fractal low of the A to the fractal high of the B, and then after that, locate where the market actually end up making its retracement. Now, simple rule is this: as long as the market does not break below the A, then the market will continue on its way. Okay, so if the market from this retracement fell all the way down to the A of 1331, then that means that the market is actually bearish, and then you'll start seeing a king's crown movement, kind of like what we ended up talking about before with oil. But in this case, because the market ended up making a retracement inside of this AB support and resistance, right? Now you have a good chance of being able to see the market is going to end up breaking the A, and then after that moving up to the upside. Okay, so we can project that the D extension, because it fell down to a red area, would go up to another red area. Okay, so that's how you can project what a D extension is going to end up being, where you can be able to take your profit at and anything else. The problem with Fibonacci's, in my mind, especially sometimes in general, is that we just don't know how long it's going to take for it to be able to hit that position, right? And that's the reason why, especially when I talk about these live streams, I primarily talk about the vortex strategy, because the vortex strategy typically, once it ends up getting into that trade, will typically end up getting out of that trade within the same day. When it comes down to a retracement to extension or ABCD type of movement, sometimes it can be weeks, sometimes it can be years, sometimes it can be days, depending on the chart that you end up getting into. But let's say the market ends up hitting 1600 and it ends up making this movement. Now your D extension will end up being complete for the overall move, but it wouldn't necessarily confirm what a D extension actually is. So kind of like what ended up happening with the United States dollar index, where we end up saying on the daily that the take profit was at 13,168, but the market ended up pushing all the way up to 13,250 until the market actually ends up breaking a counter trend line break to the upside, where you end up having two candlesticks to the left and two candlesticks to the right, to the upside. Let me go ahead and draw this out. I literally feel like I literally just taught this a couple days ago. So I'm literally giving this away for free, but that's fine. one. You haven't been in most of my sessions anyway, especially over the course of the last couple weeks. So might as well go ahead and show you. So let's say we end up getting this movement right here, and we end up getting these two candlesticks right there. Essentially, now you have a fractal high because you have two candlesticks to the left and two candlesticks to the right that are actually below it. Once that happens and a counter trend line break actually is formed to be able to move to the downside, now you have a confirmed D extension, or now you have a confirmed D position. The D extension is where it could project, where it could potentially project where the move will end up ending off. Doesn't necessarily mean that it will end off in that area. Sometimes it'll be shorter. Sometimes, well, most of the time, it'll end up going past that overall number, depending on which chart that you end up looking at. And then from there, the process just starts all over again. C turns into the A, D turns into the B. Then after that, you're looking for a new C to project to a new D extension. And then after that, you end up going from there. But just like how you end up having a fractal high to be able to determine where a position would be for the A, B, C, or D, when the market is actually moving to the downside, that C, all they end up doing was making a fractal low. So two candlesticks to the left, two candlesticks to the right, here and there. And it just starts all over again. Okay. I might have to clip that one and give that one to give that one to my students and make that one a little bit easier. But we talk about that a lot. We definitely talk about that a lot. We got a full 2-month course that ends up talking about that and being able to build that out. But there we go. So we went through some trades, talked about some overall examples, talked about the trade that's on XVX that I'm actually currently in right now. You can pull that one back up, and then after that, we'll go ahead and get out of here. The XVX trade, they end up getting triggered, was at 4,015. It literally just got triggered about 30 minutes ago. Take profit on that one is at 4,110. Stop loss is at 39.85 for that overall movement. You got a 1-to-3 risk reward ratio. Hopefully everybody ends up hitting off of this one. 15-minute looks like it's not going anywhere, so that could be a good thing. And we're actually in the middle of a low volume node. Obviously, it's the reason why we end up taking the trade in the first place. So we got a big push that we could go after. So hopefully everybody ends up making profit off of that. If you like what I end up doing, if I end up providing value for you, you can do a couple things. One, you can go to the private chat, send me a message, or go to the private chat, send me a message saying, hey, I want to hop inside of one of the free webinars to be able to talk about whether it's the Fibonacci Fundamentals course or the Vortex course or automation systems and everything else like that. I really take pride on being able to teach people a simple yet repeatable strategy that you can be able to do over and over again. But maybe it might not be time for you to be able to do that. Let's say if you're interested in being able to learn a little bit more or being able to join a community, I'm actually creating a Discord. I'm going to send out the link for everybody when it comes down to the Discord. It's going to be a very small membership fee to be able to do that monthly, but you can end up getting way more information, kind of like this, but actually being able to get more active trades that we end up getting instead of just being a 30-minute session or a 40-minute session when it comes down to that movement. But like always, click on that boost button, have confidence in your overall trades. Make sure that you end up planning your trade, and then after that trade and your plan, have confidence in what you end up doing. I want everybody to end up having a great week when it comes down to that movement, or have a great week when it comes down to everything else. I will not do a session tomorrow night, obviously, because it'll be Friday. And I don't know if I'm going to do a session in the morning, but we'll see how everything kind of plays out. I don't see anything that would kind of make us kind of jump into anything tomorrow. But like always, plan your trade your plan. I'll see y'all in the next one. Take it easy.